Hello and welcome back to Day Trading, How to Profit in Bear Markets by Wealthy Education. In this video, we begin Module 2, Counter Trend Trading Strategies. Speaking of understanding the counter trend trading strategy. Now, counter trend is a little bit of a kind of vast title, in the sense that counter trend can mean, and I have the SPYs on. This is the ETF that tracks the S&P 500. Uptrend, so you've got an uptrend. The 50-day EMA, the 200-day EMA are climbing quite nicely. So obviously counter trend would be opposite of that. You'd be selling. You can also look at counter trend through the prism of shorter term, the market's been trending lower. To buy here would be counter trend to this move, but not counter trend to the last several years. If the trend changes like it had recently and you bought, that would be a counter trend move to the overall downtrend. Now, I will say this, counter trend trading going against the longer term trend is a little bit more difficult. It can be more dangerous if you don't know what you're doing, which is what this class is about. But it also gives you the possibility of profiting. So when you have a situation like this, you get involved for the bigger move, or when you get overextended, you buy the bounce and collect a little bit of profit, And there's nothing to say that you can't buy the counter trend bounce and then sell it later and go with the longer term trend. So it's just a way of operating in the market. Some traders prefer to be buy and hold. Some prefer to be a little bit more active. In general, this tends to apply for active traders. So support and resistance is something that you need to be very in tune with and accustomed to looking for. And I will explain what these boxes are here. This is how I visualize support and resistance. So typically what will happen is a market will trade in a little area, and then it'll go higher or lower, and then it'll bounce around, and then it'll go higher and lower. And you can see that several different examples here. We rally, we kind of pull back a little bit, kind of go sideways, rally a little bit, go sideways for a while, rally, etc., etc. This is an uptrend, but that doesn't mean that we went straight up. Support and resistance is just simply where the market is supported or resisted. Now, I will draw a couple areas so you can see what they look like. So that's an area where you would say, okay, the buyers come in at 370 and they buy. You can see we've tested a couple different times. Just like you can say that this area here was resisted a couple of times. Support, resistance. But notice something. When we come back down to this little area here, and I'm going to call it 425. I'm not going to try to get it to the tick, but and that's the thing. It's not to the tick. It's an area. This area here that had been resistance became support later, and we bounced from there. So there's a whole bunch of reasons why that may be, but the biggest thing is order flow. If you shorted the market here, and you see it go against you, and it comes back and you can get out a break even, you're more than willing to close that position, meaning you buy it. You sell it, you buy it. Furthermore, if you miss this breakout above resistance, you want to get involved. This is a good area to pick up a little bit of value. So a lot of things are going on. These areas do tend to be predicated on large round numbers. So example, like $400, $200, 1.10, etc., etc. They don't have to be, but that's generally where you look for them first. So why did I draw these boxes? Well, for me, support and resistance is a lot like it can best be described maybe as a building. And the reason I say that is I'm going to go ahead and draw three numbers here, 1, 2, and 3. my poorly drawn numbers. What happens quite often, and you saw that when I said, we broke out, we came back, and we pulled back. Well, if you're on the first floor of a building and you go up to the second floor, what was resistance is now support. It's the floor. It was the ceiling, now it's the floor. In the other direction, if you drop from level 3 to level 2, this support here now becomes your ceiling. It's your resistance. So that's one way to visualize it, is probably the best way to put it. So that's kind of how I was taught back in the day on how to think about it. Another thing that you need to keep in mind is that market memory, like I said, does happen. It's known as market memory. So for example, there's something going on right here at about 4:15. You don't need to know who's there and who's buying or selling, but you do need to recognize that something is going on. So it's interesting that we support broke down, resistance broke down, a little bit of resistance. We finally broke above there, and now as I record this, it's showing a little bit of support. So we'll see if it holds. And you really don't know. It's just an area to look for a trade. Then after that, you begin to look at setups. So that's the whole concept of support and resistance in a nutshell. So what you're looking for, as an example, if you're going to go counter trend, and let's say you're going counter trend against what has become a downtrend. So you can draw a horizontal line and you can drag it like that. And you can see, is there an area where I've seen a lot of noise previously? And you can make an argument for that, and you can see that we did in fact bounce from there. Now, is it a trade that you want to hang on to forever? No, of course not. But notice, look where we're at again. So obviously something is going on. There are counter trend trades that you can use within the context of a bigger trend. So for example, this is an area that was clearly important. So when we broke above it, we dropped back. That's not a huge surprise to see the buyers would be involved. Notice this area here was a little difficult to get above. We rallied, we came back, we pulled back, found support there twice. On top of that, we're right at the 50-day EMA. Now, there are candlesticks that can give you a little bit of a clue as well. Little foreshadowing for the course, this candlestick here was an excellent signal. You can also look for volume. Volume picked up there, so that shows there's more interest there at an area where you would expect to see, at least somebody paying attention to it. So counter trend trading is not impossible, and in fact, can be with the longer trend. You're just looking at a pullback. The short-term trend's negative, the longer-term trend is positive. Longer-term trend negative, short-term trend positive. So you get a little bit of a bounce. Furthermore, you have to recognize that in some markets, like stock markets, they are designed to go higher over the longer term. I should say indices, not stock markets. So the SPY is bouncing, not a huge surprise. Now, here's a recent trade that made a lot of sense because we formed this candlestick, again, we'll talk about that later, at the 1.00 level in the euro. That was a nice little bounce all the way up to this previous support. So you can see how you could have played that. And in fact, TradingView doesn't even go back far enough, but I think the last time we were at parity was around 2004, 3, something like that, if memory serves me right. So you can see how that came into play. You can use, obvious support there. We bounced. We pulled back here over the course of several days. Nice little reaction, little double bottom here at the 38.2% Fibonacci retracement level, which is, a tactic that you can use. Now that the 50-day EMA has crossed below the 200-day EMA, it kicks off a bearish market. Well, let's see if there's areas where we might find support. Right there, you would find support. You could have taken that trade there. Again, it just comes down to the context you want to use it. And finally, of course, it's going to be the same with crypto. So let's look at Ethereum. Ethereum Notice how we bounced from 1,000, nice big figure, and especially once we broke out of this little consolidation, so we broke above there and went all the way back to 2,000, nice big figure, still counter trend. So you can definitely see how that could be used. And one more thing that I would look at before we end the video, you can see this massive run up here. And let me get rid of the 2000, although keep in mind that it's right there. Notice how we kind of hung out here at the 61.8% Fibonacci retracement level. But what really captures my eye is the fact that this area had been important previously and noisy, and that was a nice, it's a pullback in a longer term trend. That's counter trend to what's going on. So you can see how that played out as well. So in the next video, we'll talk about using something called a Fibonacci extension to spot potential market bottoms.